What's going on, everyone? My name is Nicholas Merton here from DataDash, and today's April 21st of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we've got to bring up the topic of the Bitcoin liquidity trap. I need to spend some time today to talk a little bit about what we're expecting here from Bitcoin, considering what we've been discussing over the past few weeks and months. But more importantly, we need to talk about some really damning news in relation to the semiconductor market tied towards the narrative that everyone's excited about, which is AI. And we've got to talk about the broad macro picture and how this is likely a broad liquidity trap that is helping to play into what the Fed is aiming to do, and that is to subtract liquidity from the core economy. We've got a lot of things to dive into in today's video. If you guys happen to enjoy the video, consider dropping a like. We've also got a sponsored interview later on with LimeWire, which is coming back bigger and better than ever as a content creator platform. So stay tuned for the sponsored interview later on. You guys won't want to miss it. So let's go ahead and kick things off here. And I want to start here by talking about Bitcoin. Now, you guys might have noticed over the past few days, Bitcoin has corrected roughly about 3K here from the relative highs at around $31,000. These last few trading days have knocked us all the way back to where we were back on March 19th. So over a month's worth of progress in Bitcoin's price that, again, people have been selling you on, that you have to FOMO into. Well, that's faded here just over the last few days, right? And I'm not saying that Bitcoin can't bounce up over the next day or so. I'm not saying that it's going to fall off a cliff immediately. But I think we're very much getting towards the tail end of this. This is why back about a week ago, we put out our video talking about how we're starting to plan to build our short positions. We haven't done so yet. Just want to let you guys know and stuff that we're not 100% there just yet, but we are starting to get towards watching our momentum indicators, waiting for that signal, and continuing to see more chop. The more I see this push sideways and start to teeter with breaking potential support rather than going up towards resistance, going up towards that 32, 33K range, up here where we used to see price come up, this is further proof for me that this was a temporary deviation in this previous pocket that used to be support way back in 2021 and 2020, but is now likely to start acting as resistance. Once more, our indicators here are signaling some pretty worrying signs. Not only on the daily time frame do we have a momentum flip, however, we are waiting on the weekly time frame to really start potentially building big positions. But once more, we're waiting to see whether or not we can hold within this important level within the Lux Algo price action concepts indicator. This is measuring severe volume profiles across price action over time. And essentially speaking, if we don't see price holding within this range of 27 to around 28,500, that's going to be your first telltale sign that we've got a long way to go down. The last significant range that we had back here was around 19,500 to 2,300. Now, there's no absolute guarantee that it has to go down there, but with our momentum flipping red and not having many significant price ranges of support, this is going to be a difficult time for Bitcoin, and it's going to likely play into the fact that what markets have priced in was nothing more than a narrative. The whole bank run philosophy, which we've been talking about here. I'm not here to say that there hasn't been anyone buying Bitcoin or some institutions haven't. Of course, sure, there are some market participants. But if you're looking at the market metrics, whether it be stablecoin liquidity, whether you're simply just looking at reality of the measurements of inflows into these markets, stablecoins should be giving us this telltale sign because they're the biggest on-ramp to get liquidity into the crypto space. And unfortunately, we are not seeing that right now. So we've talked about Bitcoin. There's also Ethereum as well. Again, the other day, as you guys might remember, we talked about the deviation above the relative high range from May 31st of 2022, August 14th of 2022, and here as well, retesting into that range or above that range here in April of 2023. Right at that big even level of 2,000. It's a psychological level. It's a level where people feel FOMO. And what better way to get people to FOMO in at the worst possible time than pushing it right above that $2,000 level to its highest level in nearly a year. That's exactly the kind of setup I look for a deviation. A short-term window of time where price gets above some range and then moves right back down. And once it collapses below there, the idea is as follows. When you get below and deviate from that previous high range and you come back down into the channel, right? If it can't start to hold and continue moving higher, you're moving back down likely towards the relative previous support range, whether it be a short-term range like the one built throughout the year since back here in January around $1,500 down to around $1,300, or taking us back down towards the low four-digit territory around $1,000 per Ethereum coin, maybe even lower. Right. Again, I'm going to talk a little bit about why we're so confident that things are going to start moving down over the next couple months. Why we've been so solidly betting on this narrative, guys. I'm not just here to be bearish. It doesn't benefit our channel here from a business perspective to do so. I'm here to be honest with you guys, though, and I want to talk about why we're feeling this way. Okay. It doesn't mean we'll get it 100% right, but there's a really big dynamic we need to talk about here, and that is the semiconductor market. If you are bullish AI, if you are bullish OpenAI, ChatGPT, Microsoft, the FANG stocks, any potential narrative that could perhaps spark really a sustainable long-term bull market. That's the narrative that everyone's hoping for. We're going to have some kind of soft landing. The bull market's back, baby. It's time to go to all-time highs. Time to start rolling the dice, placing your bets, and getting used to the good times again. That's the narrative that the bulls are chasing right now. But if we take a look at the economic data for semiconductors, that is not the narrative we are seeing. Now, I know a lot of people are convinced that AI as a narrative is just going to save the day, that there's going to be this exponential curve of adoption, and it's just going to completely revolutionize the world. We'll have artificial general intelligence in 3 months' time, and it's just going to be great, right? It's the same kind of hyperbolic thinking that a lot of, to be honest, and I'm not meaning to be critical here, a lot of Bitcoin investors can fall into. Very well-meaning, smart, and good people, many people, including myself, used to fall for, that you have this expectation that the banking system is going to collapse in 90 days. Or when you hear someone like Balaji, who is a successful technology CTO at a previous large company like Coinbase, it's easy to fall victim to a couple charts being posted on Twitter and hearing this narrative that obviously sounds good. But if we are focusing in on this narrative of AI, the best place to look is for the demand in semiconductors. Now, I'm not going to say TSMC here, right, which is a little bit less known. Most people think about NVIDIA, they think about AMD, when they think about CPUs or GPU processors. Essentially speaking, TSMC is the core manufacturer of the vast majority of NVIDIA's products. NVIDIA designs their chip designs, but TSMC, which is based in Taiwan, as you guys probably know about, you've probably heard about the controversy or the situation around semiconductor manufacturing in Taiwan and the conflict on a macro scale between the US and China. There are not only those concerns to be discussed, but the biggest thing that no one is talking about is this paragraph here. Now, because TSMC is not based in the United States, it has different reporting principles than a company based in the US. So we unfortunately don't have all the quarterly data that we would get with a normal publicly traded company to get those up-to-date inventory numbers. But the quote here, that what we got within the report from TSMC's first quarter report, tells us everything we need to know here. Our first quarter business was impacted by weakening macroeconomic conditions and softening end market demand, which led consumers to adjust their demand accordingly. Moving into the second quarter of 2023, we expect our business to continue to be impacted by customers' further inventory adjustment. This is the only key component you guys need to focus on here. Now, the narrative right now is that AI in its current state and over the next few months is just going to absolutely absorb the demand for semiconductors. Hence why NVIDIA is spiking like a rocket right now, and why generally other computer processor developers such as AMD, even those who aren't really developed so much on GPU manufacturing, which is what really fuels AI consumption of resources. If we take a look here at the core fundamentals for inventory, whether you're looking at TSMC or you're taking a look at a whole range of different computer processors, you will find that there is a huge glut of inventory. I would bet that it is lower than where this is now. The last numbers we have to work with here, it's unfortunate, it's the only data we have right now, is the financials back from September 30th at around 7.18 billion, down from the peak of 7.39 billion. So quarterly, there is a slight decline here between the last two quarters that we have to work with. I bet that number has dropped a little bit, but no matter if the number now is at 7 billion or 6.5 billion, no matter what, we are a far cry away from getting away from the largest inventory readings we've had in TSMC's history. So we are not seeing this overt exponential adoption of GPU manufacturing just yet. We are not seeing this absolutely complete major demand for chip manufacturers to satisfy AI demands, right? And this is a key component I want to talk about here, that unfortunately it is so easy to get caught up in the trap of these relief rallies, especially those that are market leaders like Nvidia, which were market leaders before and have really been sold on the narrative that AI is going to save these companies, it's going to help them to get rid of their inventories and continue maintaining at these kind of valuations. Folks, I gotta be honest with you guys. Well, AI is very exciting. It is definitely over the next year even, but over the next 10 years, it's going to have major disruptive elements to it. I'm not going to deny that. But it's got its flaws. AI is not perfect yet. I've tried to use it for a whole range of things. I've done my due diligence on it. And while it is useful for some different types of applications, while there is continuing growth and adoption, we spoke about it here on the channel that essentially AI is not enough to save and justify these valuations for these companies. OpenAI, for example, as we talked about for the past couple months, has had an estimate that sometime by the end of 2024 that they would reach $1 billion in revenue. Not profit, revenue. And if you're considering Microsoft stock, for example, or Nvidia stock as your bet on that growth, I gotta tell you guys, considering the size and scale of these companies and the other markets that they service, AI is a blip on the map comparative to other services still, and it will continue to be that way for a long period of time. So the AI narrative definitely drives up valuations in the short term, but when reality kicks in and we realize that it's not absorbing that inventory and leaving semiconductors to be in a scarce manner, then we are going to see equity prices correct in these sectors. Just take a look here at price over the past couple weeks, not shooting up like a rocket over the past few months, and we're waiting for those flips on our momentum indicator that we share within the Dash report. Take a look at Tesla as well. Tesla is a great example of this. Have nothing strong against the company, again, no personal hard feelings, but at the end of the day, guys, we are in a recession. We are stepping into the slow but steady progress. Right now, we are in technically stagflation. It's the initial stages, which can be very confusing, where housing prices and other high-end assets still remain relatively expensive. People's capital starts to dry up. We start to see inflation still remaining, being relatively sticky, leading to the Fed having to keep interest rates suspended for as long as possible. And then something will break. We don't know what it is. Something will likely happen, similar to what we saw in the banking sector back about a month ago. Right? Essentially speaking, Tesla dropped down 9.75% year on year. I think sales were roughly down about, I'm not 20%, I think it was profits were essentially down 20% year over year, showcasing one of the big problems. While Tesla is still selling cars like crazy, a great example of stagflation is that prices are having to start coming down here. Essentially, not that the prices so much are coming down to reasonable levels, but the margin is getting squeezed for these companies. Their profit margins are contracting. That kills not only the idea of future growth potential, but more importantly, future profit potential for these companies. And that has left Tesla dropping down. You don't need me to tell you that the financial reports weren't looking very good. Tesla dropped like a rock, down nearly 10%. Now, is this the kind of activity we really want to see in the high growth stocks in a new bull market? Not exactly. And on top of that, this has taken us back down after already a correction really since back in February, back to where we were in January, right? If we zoom out into that weekly time frame, Tesla looks like it's heading down for new lows. I don't know what that low range is going to be. We think that Tesla is going to be seeing at a minimum an 85-90% correction. And you guys understand just how brutal that can be from top to bottom. This is the long-term game. And it's not just me who is just worried about the market and stuff and, spreading FUD. I'm not here to manipulate markets, guys. I don't have that kind of impact. I'm here just to be honest with you guys about the economic data. And one of the biggest things that we talked about when the probability markets weren't as favorable of our opinion, well, take a look at the chances of a Fed rate hike. 82% for another 25 basis points here in the next FOMC meeting in a couple weeks on May 3rd. You guys may remember, for those of you who catch every daily update, we were covering this metric when it was a 50% bet, when it was a 30% bet, in the 20% range. We've been talking about this for a while, and we've been betting that the Fed, after it deals with this little short-term blip in the banking market, the bank runs that we saw through Silicon Valley Bank and First Republic Bank, once they dealt with that swiftly, as they did, they're going to keep tightening. They're going to keep going until something breaks that is out of their control. And they're only going to pivot when they really need to, because inflation, their mandate is to get inflation back down to 2%, right? Just a couple weeks ago, no one was of this opinion. It was the minority. Now the minority is saying that we are going to see no rate hike at the end of the day, right? So again, as we start to approach this meeting, it's likely that the Fed is going to bump up rates even more. And this has again been a part of a broader trend that we talked about over a year plus ago, that we were going to be up and around 5% for the Fed's funds rate. A lot of people didn't believe that. We were confident that the Fed had to get interest rates to a point where it was above the rate of inflation. And now, as the CPI is starting to cool down, there is a chance that if the Fed can keep rates here, it may be able to get ahead of inflation. If it continues to increment time and time again, continuing to contract the core liquidity within the economy. Now, there's a couple different charts here that I think should definitely be of concern to you guys. If you're buying into this equity environment right now, one really important thing to know is that we need to analyze the VIX. Now, the VIX is doing something quite interesting here. It's yet again deviating slightly below the general trend line that it's been holding for the last 5 years. And while a lot of people are definitely getting excited about this here, who knows, maybe we start to really see a longer term breakdown. That would be one of my signs to really get long and get optimistic. But if this is a short-term deviation that can't hold, to put things in perspective, this is where the VIX was when equities topped in December of 2021. When the Dow Jones, S&P 500, maybe the tech stocks have cooled down a little bit. That was when equity valuations got back for total stock market value back to their all-time highs. So do what you will with that. Do you really want to be buying into an environment of such low volatility, new all-time highs, or more specifically, the VIX being at a range where it was in the previous all-time highs? How much more upside can we really have here? Do we really have the macro environment that's going to suit a continued rally? Well, another thing that's really important to focus on is what's going on over at the Fed. I know a lot of people were selling the idea that this was going to be more than just QE light, that this was going to be a huge resurgence of the balance sheet, that the Fed was just going to print tons of liquidity. That this time is just like any other time that we've seen. Well, a lot of those proponents who were talking about the balance sheet are no longer talking about it, because they're starting to realize what we talked about during this expansion, which is that this is not your typical QE. Not all QE is created equal. This was a short-term balance sheet expansion due to temporary facilitating loans towards a variety of commercial banks, essentially providing relief liquidity in the financial system in order to prevent more bank runs. And this came with very clear strings attached that essentially these were going to be short-term support lines for the financial system. And since then, we've already corrected about $120 billion. Now, sure, still a far cry here, still where we were back in November, but the trend is clear here. We are not going to new all-time highs of the balance sheet, and the Fed cannot just print like it did over the last decade. It's because of inflation. I really want you guys to think about this for a moment, because I know some of you may disagree with me. And if you're here to this point, I want to try to be as accommodating as possible. And I don't want to speak in absolute terms, right? I do want to give you guys my confident opinion, but I want you to think about something here. If you think about it from a reasonable perspective, right? If the Fed right now is still struggling to get inflation down to its 2% target, what would happen essentially, right, in the current trajectory? I think the Fed's doing the right thing right now. It's keeping interest rates high. We are seeing a reduction in the rate of inflation. We're seeing a cool down in demand in the economy. What would happen if the Fed really started to print its way back up towards $9 trillion and continue to go on like a lot of people are claiming? What would happen to the rate of inflation? All of the work the Fed would have done would be wiped off the map. You could kiss goodbye the chances of reaching 2% anytime in the next year or so. The Fed knows this. And I don't want you guys to feel absolutely scared, but it's the reason we've been remaining in cash. And if anything, we're looking to get short here soon and monetize on the downside. At the end of the day, guys, I don't mean to be a negative person. I'm just going to trade where I see the opportunity. And I think more than anything, putting my money where my mouth is much more valuable than me just simply sitting here and telling you guys what I think the market's going to do. That's what we're leaning towards. And who knows? Maybe we don't get it right. But I got to tell you guys, right when everyone was getting fearful in the dollar, I'm looking for that daily trend flip here on the Dixie indicator. Right, we can see on the index here for the dollar, right, we pretty much almost got a double bottom here within the contestment range between 100 and 103 on the index. This has been a range where we've been looking for a potential long once we get the blue flip on our momentum indicator. And again, I come back here towards the essential chart, which is the US 10 to 20-year yield. Bond market is signaling to us with significant yield curve inversion that times are about to get tough. Last but not least here, FANG stocks. I'll let you do with this chart however you will. Think about those big tech names that led in the last bull market. You think they're going to lead this time around? And if not them, who? Who's going to be leading? It doesn't mean that there aren't exciting plays to watch for in this market, guys. It's not to say that there won't be good times, but we need to be realistic about what's going to happen here in the near term so we don't get wrecked making the wrong kind of trades. So we don't go all in 10x leverage on Bitcoin or Ethereum or your favorite altcoin, long or short. We've got to be diligent. You have to have mitigated risk and be able to take advantage of these euphoric periods of time so that we can hopefully build our cash pile and really go in when it's time to get long. In the meantime, though, we should be doing our research, trying to find the projects that are going to really stand out. So if you guys enjoyed this kind of video, consider dropping a like. And I want to go ahead and dive into one of those projects that I think is definitely one to at least keep on your radar at a minimum. And that's why today we're doing an interview with LimeWire, which is aiming to revolutionize the Web3 space when it comes to content creators. So let's go ahead and dive into the interview. Alrighty, everyone. So in today's sponsored interview, I'm sitting down with Marcus Feistel, who is the COO of LimeWire, a brand that many of us probably know of throughout our childhoods growing up, which is now pivoting towards being a large player in the Web3 space for content creators, which is definitely interesting for someone like myself and many of you out there who might be creating your own content and communities. Marcus, thank you, man, for making the time. I'm really excited to get to chat with you guys. I've chatted with Tilly and a lot of the guys from the team over the past couple months, and I'm really excited to see that what you've been working on behind the scenes is finally coming to light here over the past few months. So thanks for making the time, man. I appreciate it.
Yeah, thanks for having us today. Really, really exciting to talk about it. As you just said, there's been quite a lot of developments on our end, especially on the product side, also launching a token soon. So yeah, very, very much looking forward to having this chat today.
Good summit. So I want to go ahead and focus on the product side first, which is that you guys are back. So LimeWire as a brand and company has kind of retooled itself and is focusing on a new market within the crypto space. And really, I think in the broader Web2 space of servicing content creators. And that's not just YouTubers like myself. It could be musicians, anyone with an ecosystem. So I'm curious, people know about LimeWire through their experience using it as kind of a P2P file sharing platform for music and other content. But what is different now this time with LimeWire, and why is it such a big deal?
Yeah, I mean, to explain maybe the entire story, probably also for those that are not 100% familiar with the old brand. So LimeWire, as you just mentioned before, used to be like this big peer-to-peer file sharing platform of the early 2000s, right? Pretty much also paved the way in some sense for what now is the crypto movement. Yeah. The peer-to-peer idea behind it, right? And then all the controversy about the platform and what happened with illegal music downloads, like water under the bridge, I would say. Obviously, they had to shut down the company in the 2010, 2011 years. But we thought that like this brand, the entire hype that was around content creators back in the day, this concept of sharing it and being like in a peer-to-peer network is exactly what we would need now nowadays in the new Web3 world, which is why we set out with the strategy to pretty much acquire a brand like this and let it live again. Let's relaunch it. That was pretty much our main goal in the past years. Acquired all the assets around it, acquired the domain, the social media accounts, the brand assets. and relaunched it initially last year with the first iteration of the product as an NFT marketplace for music artists. That was really like the first big idea to give music artists all the tools that they need to create their content in a Web3 environment, to be able to easily launch NFTs, to easily approach their fans, their super fans, with digital collectibles and share their content as a digital collectible. And very soon last year, we recognized that also based on feedback from a lot of artists, that they were very much looking forward for, or researching rather, for solutions that also give them an opportunity to manage their Web3 community and their fan base much more actively. And I think that's exactly where LimeWire comes in now as a mainstream brand, and something like just as a word that resonates with a lot of people in the media, in the music, in the general entertainment space, and give them now a tool that makes that leap from the mainstream brand towards the Web3, which definitely isn't too mainstream yet. I think we got to face that for sure. So that's exactly what we set out to do. We now just in March launched pretty much our second iteration of the platform, which is now a fully fledged subscription model platform with all the back-end capabilities of an NFT marketplace, where you can still trade the assets, where you can still own everything as a fan. But now it's much more about the actual content. So you can see in the front end that every content piece is easy to consume. You can watch the videos, you can listen to the music files, very, very simple in a newsfeed format, and then just subscribe to the artists that you most like, that you really support. And every content piece, if you're subscribed, will automatically be an NFT into your library on LimeWire. So that's really what we set out to do, and our main purpose to take that entire space from the Web3 space towards the mainstream for the media and entertainment industry.
One thing I wanted to say, Marcus, because like I said, I've been following, LimeWire not only way back since it was the peer-to-peer file sharing platform, but as you mentioned, LimeWire, since you guys have really been taking over it and building the brand out again, it's changed over time. I remember when the first platform came up and you had this ability for mainly like musicians or specifically music content creators to go out there and create like exclusive songs where there would only be 100 NFTs or access points to that song. So it'd be exclusive for a certain user base. And what I think what's really cool is like, while there was some really awesome niche features that you guys built out, what I like about this new experience that you built is it's a familiar kind of Web2 experience, that people are familiar with. But on top of that, it's going to allow for people to utilize these elements of Web3, of exclusive content, and also being able to monetize. As a content creator, I know how important this is, to be able to have kind of this familiar user experience for users, to be able to feed in and be a part of that community as a content creator, so you can monetize your content and continue doing what you're doing and be able to interact with them at the end of the day. I think that that's something that is solely missing in not just the crypto space, but I think overall for content creators. It's a big pain point. And being able to kind of clearly define a simple subscription model, and then from there be able to offer exclusive content on top of that, I think it's a very awesome kind of opportunity for creators.
Yeah, 100%. I couldn't agree more. Obviously, you as a content creator understand best, I guess, where the pain points are. But that's exactly where I think we are just very uniquely positioned as LimeWire. Not just the brand as such, because it's very, very mainstream and well known in the space already, but also from a technical perspective, right? Because nowadays, you only have two types of platforms nowadays. You either have those rather mainstream Web 2-ish platforms, which are subscription models most of the time, or regular social media platforms where it's hard to monetize. But for these platforms, especially for the subscription-based ones, if you go on those and you, as an artist, as a creator, want to monetize on your fan base, it's, for a lot of them, it's really hard to communicate that to their fans, right? Because it's pretty much asking them to pay money to get the content now paid, which oftentimes used to be free if I were like on YouTube or on Instagram or any other of the social media platforms. So it's a bit of a hard sell. And then on the other side, you got those marketplaces like OpenSea or the regular NFT marketplaces where you can monetize it, but it's very targeted to a very, very small niche of your audience, because not everybody is fully equipped with Web3 knowledge. And it's also not really easy to consume the content, because I'm not watching a video on based on the NFT I just bought on a marketplace, which is now, it's really tough actually. So we set out to pretty much combine the two, right? It's really a Web 2 experience from in terms of all the simplicity and the consuming part of the content. You just see it in the feed, you click on play, that's it. But at the same time, the full capabilities of owning content and as a fan, pretty much becoming part of that creator journey. So you more become an investor and somebody who has an interest in that creator, because you also hold a part of these assets, much rather than just paying almost a donation or paying a fee to access content, which before might have even been for free.
Yeah, and I think what's nice about it is that it helps, I think, get a lot of people into Web3. I mean, people have the ability to do crypto payments and I think connect their wallet as well. So there'll be a lot of different Web3 infrastructure kind of baked into the overall website. But I'm curious to ask you, Marcus, like, you know, I've been keeping up with the platform. Like every week I've been kind of diving in, seeing like changes as it slowly is getting ready to kind of come online. One thing I wanted to ask you is, since the announcement back in March of 2022, where we're coming up on about a year since LimeWire made this big announcement, you guys have done a $10 million raise. You've got some really big partnerships coming down the pipeline. You got even big artists like Sean Kingston as well, who are coming on towards the LimeWire brand and becoming participants in the ecosystem. How are things like kind of progressing since then? What are the big things that you guys are really looking forward to here in the near term?
So in the next weeks and months, there's a lot of big announcements coming now, actually. So what we are working towards, you just mentioned it, we have a whole list of headline artists which are launching over the next weeks. Sean Kingston was just the first one that we announced this quarter. He just went live last week, actually, with an exclusive song, Sally, which has never been released anywhere else. And it's going to stay exclusive forever for the LimeWire platform. So it's just for our community. We also have a big roster of, I think, more than 15 headline artists, which are still going to launch within the next months. We will actually announce one just this week. So also pretty exciting, which is a much longer term, like longer term agreement or something where the artist, where she is going to release content on a continuous basis on LimeWire, which is why we also pivoted towards a subscription model. And the second big topic we are currently focusing on, which is like at least similar excitement around it in the community and the user base, is our LimeWire token. So that's exactly what you mentioned before. We did a 10 million raise last year, which was a token raise. We are now launching the token 2nd of May as like a public launch where everybody can also buy into. And then this is going to be integrated into the platform, lots of utility and different perks that users can have on a platform with the LimeWire token. And then eventually everything is really coming together. This Web 2 interface with all the Web 3 capabilities of having a token integrated, having crypto payments, having wallets integrated. So that's really exciting to see in the next weeks in product, token and artist announcements.
And just on that point, Marcus, like thinking about kind of the broad vision of what you guys are building, obviously we know that, like, for example, like Sean Kingston can come out and release a unique song that's going to be exclusive to his subscribers or participants on LimeWire. Are there some other really exciting ways you see, not just maybe even musicians, but other types of artists coming out and creating content? When I was thinking about it myself, you know, I have, for example, my own newsletter on the channel. And one of the things I always thought about is like, is there something maybe in between I could give people where I give some exclusive content or videos that I don't feature on my YouTube channel? As more of a crypto content creator. So I'm curious, are there any fascinating ways that people are interacting with the LimeWire framework and like interacting better with their audiences?
Yeah, I mean, that's really the exciting bit about this new interface that we have now. And now it's much easier to consume completely different kinds of content, right? Before it was really catered towards music artists, which is like a great fit for our brand. And definitely there's a need in that space as well. But now we're completely open for any type of creator, because it's just very easy to upload the content, to host it on our end, but also for the creators and for the fans to consume that content. So just to give you a couple of examples, one of the artists we are now working with, she's releasing content on a weekly, almost bi-weekly basis, and it's completely different types. She is originally a music artist. I can't name her yet because we're actually announcing it just this week. But with her working on it, we will actually get podcasts on the platform. We will get content like video calls that they are hosting on LimeWire with their subscriber community. And not just the regular in quotation marks, the regular music or video content. So it's really a broad types, but also completely different genres. We have some of the creators are YouTube creators that are sharing pretty much extended versions of the YouTube content now on LimeWire. We have others which are focusing completely on poems, so just text content, which is also nice. So very different types, and always catered towards this community. And I think that's really exciting to see not only the way people interact with the platform, be it fans or creators, but also the different types of content that are now being shared, which is super exciting, and also for users much easier to jump between different types of content they wanna subscribe to.
Yeah, and I'll definitely, if I haven't already, I'll put some video up on the screen, guys, so you can kind of see the user experience around LimeWire. To be honest, I think what you guys have built is not only again a very familiar experience, it's very clean. Like, it's something that I think for anyone who may not be a native Web3 user, it's going to allow you guys to branch out and bring a lot of people into the crypto ecosystem. It's going to help support a lot of content creators. And I was thinking, like, Marius, you know, like, you guys have made a lot of progress in the time that you guys have been working on this. I know how difficult it is to build a project. I had my own startup in the past over a couple of years, and it's difficult to get to that kind of inflection point. But when you do hit that inflection point, you know, thinking about like kind of like a 3 to 5 year journey for your guys' company, where do you see LimeWire going long term? Like, what's kind of the end game for what you guys are trying to build, at least from the current perspective? I know things can always change, but I think what you're building is incredibly powerful long term for content creators.
So I think, as I just said before, we are in a very unique position right now, because we're pretty much in this intersection of a Web2 subscription, easy to consume platform, and the Web3 fully enabled NFT marketplace with capability to own your content and actually have everything either on chain or in your wallet custodial with us. And I think if I look forward for the next 5 years and just see where the journey could go, I think we are in a very good position as LimeWire to become the #1 platform for content creators and fans alike to have ownable content, to not just consume it, but to actually be part of that journey, and be much more than the regular social media platforms, where pretty much you're talking to a super broad audience and not really targeted towards your fans. I think we can become the #1 content subscription platform with all the benefits and all the capabilities of a Web3 world. And easy to adopt for everybody who is not part of that Web3 world yet, because you can just jump on. You don't even realize we have a lot of fans and artists on the platform that don't fully realize that part of this is on chain, or that they're now holding an NFT in a wallet with LimeWire. They just like the fact that they can now also like see this asset in the library. They can now trade it with other fans and interact with it. And I think that's exactly where it needs to be. That's exactly what's also driving the mainstream adoption in the Web3 world. And that's definitely our goal to set out and much do that job as a mainstream brand.
I think there is something to be said as well, Marcus, because I don't mean to speak negatively about the kind of PFP, like profile picture NFTs, or like the Bored Apes and CryptoPunks. I think there's definitely a market for all that. But I think what's so cool about what you guys are building is you're starting to develop digital collectibles, a kind of standard for digital collectibles for things that I think people really want to keep, like exclusive access to certain songs, being able to say that you're one of 100 users who has access to a certain piece of content. I think that there's something that's definitely very unique about that. I mean, people, and as you mentioned, you're not targeting this massive audience of people. You're really focusing on people who resonate already with these brands and who want to be a part of these content creators' lives in a way that other consumers of the content may not be. So I think that it's a very clear, defined business proposition. And I think that it's going to be useful, not just for content creators, but also for a lot of people who want to engage with artists and other content creators in a deeper way. And one thing you guys did that really, I think, was just well done and incredibly creative was this LimeWire game that you guys launched. I was totally hooked when I got the email for it and I was checking into it, where basically the premise is, if you guys want to test it out, I'll leave a link down below in the description. Don't worry, there's no real viruses. But if you guys are familiar with LimeWire, you guys probably know that when you are downloading or seeding content, sometimes things could go south. So the thing is, in the LimeWire game, there's this ability to go out and try to download as many songs as possible before you get a virus, so to speak. And there's a leaderboard, there's some really cool giveaways that they're doing. But I think that this is, like, again, showcasing how you guys really have such a strong resonating brand around this idea. It's going to bring in lots of musicians, I think, in the long term, who remember using it back in the day. you know, and being able to just bring in a ton of users out there in the market for this vision that you guys have long-term to build that network effect. And I think what's really cool about it, Marcus, from like a user experience perspective, is that when I go on LimeWire as an application, I love how it acts like a social media feed where I can see all the content creators, all the musicians, all the artists that I may follow. And it's, like, as you said, it's very easy to interact with. But now you guys have this token raise you guys are doing, you have all these big developments coming up. If people want to learn more about like what you guys are doing, they want to get more involved, maybe in becoming an active community member, what's the best place for them to go to? And I'll go ahead and leave the links down below if you guys are interested in checking it out.
Sure. I mean, for everybody who just wants to test the platform, see how it works and see the feed and see the artist releases we're doing, the easiest way is really limewire.com. That's pretty much our main platform. But if you want to learn about everything around the vision, even read our white paper, a short version of it, just hit lmwr.com. That's also where we will actually launch the token on May 2nd, where we actually do the public sale of the token. And you can find all the information, not only about the token, but the platform, how it's going to be integrated, token and platform, vice versa, and all the journey, roadmap, team. So that's really the main spots. You can also sign up for the waitlist for the public sale or join our community there. So that's really the place to be, to dive as deep as you can into the LimeWire ecosystem, I would say.
Awesome, man. Well, like I said, guys, I'll leave the links down below in the description if you guys want to check it out. Marcus, it was a pleasure to have you on, man. I think it's a really exciting journey for what you guys are building. I'm excited to see where it'll go over the next year, seeing as it's changed over the last year since you guys took over. And I just think overall, this is a desperately needed product coming from a content creator myself. So I think you guys are doing really great wonders with the LimeWire brand. And I'm excited to see the platform launch later here in the next few weeks.
Perfect. Thanks for having us. And yeah, it was really, really a pleasure talking to you. So looking forward to the next months as well. Thank you.
Likewise, Marcus. Thanks, man.